Welcome back to Power Lunch. It is time for Trading Nation. Chip stocks getting wrecked today after an Apple supplier, Lumentum, sparked concerns over industry demand. Today's losses adding to heavy selling in the past week with names like Qualcomm, Skyworks, Nvidia, Micron, AMD, all deep in the red. JC O'Harris with MKM Partners, Boris Schlossberg with BK Asset Management to survey the damage here. JC, this group actually has been under pressure for months now. What are you looking for in the charts to give us some indication of where things may eventually get some relief?
You know, you're right. It's becoming increasingly more difficult to defend this area of the market. Now, coming into 2018, you know, a pause was likely. That's following 2 years of 35% gains. So a pause or consolidation was actually healthy. But as this pause continued to draw out as the year progressed, we started to lose technical strength. And one way we measure that is by looking at trend, by looking at a 40-week moving average. You know, that was great support on the way up. All of a sudden, we started to break down below trend. You know, October was the worst month for the SMH. We undercut trend. We also lost relative ground to the S&P 500. So we have a relative lagger now. We had support at the 98 level. That was critical support that we were really keeping a keen eye on. But again, that worst month of October, we undercut through support. We did try to rally back to it, but as we always say, support becomes resistance. We were unable to break above that. So, you know, this is just a very, very weak area of the market. We can point to some support at 86, which was those October lows, but a break below that and all bets are off.
All right, so it looks like the sector's kind of lost the benefit of the doubt. Boris, are your kind of contrarian investing instincts twitching here at all, feeling like, you know, maybe you want to step in to push against this gloom?
No, it's a perfect storm for the semis at this point. You have slowdown in China, you have saturation of demand in the Western markets, you have a rising interest rate environment, and you have the U.S.-Chinese trade war tensions, which are putting pressure on prices. So overall, the only bright spot on the horizon is 5G. And I think it's a very thin reed of hope now to basically believe that 5G will resuscitate this whole demand right away. It could take much longer than we think. And the general history of semis is they go from grossly overbought conditions to grossly oversold conditions. And I don't think we're anywhere near a capitulation point right now. So at very best, I'd want to be selling puts in this scenario. But generally, I just wouldn't want to stand down for now because I think there's more to come to the downside before it finally washes out.
All right, yeah, and the stocks often look cheap well before they actually do hit a low sometimes, too, with these cyclical groups. So, all right, guys, appreciate it. Boris, JC, thanks for your time. For more Trading Nation, head to our website or follow us on Twitter @TradingNation.
Technicians often look to wedge patterns as catalysts for stocks. A bullish wedge occurs within an uptrend and consists of two converging trend lines slanted downward. A break of the upper trend line is considered a bullish signal. Conversely, a bearish wedge occurs within a downtrend and consists of two converging lines pointed upwards. A break of the lower trend line is considered a bearish signal.